All right, hey everybody, Dean here from the Feely Real Estate Group, and I'm back with another update on the real estate market and what's been happening with inventory levels, prices, and interest rates. So we're going to go through all that today. First things first, I wanted to get into the inventory levels. So we actually ended up starting off pretty strong in towards the year, a lot higher than going back to 2019. That was kind of the highest amount of inventory we've seen. So it actually went up pretty good here in January, and then we saw it taper off. Houses started selling a little bit faster and stuff like that. People got a little bit of motivation as the year went on. So we saw that come up, and then we saw it drop back down to similar levels we saw the last few years. Obviously, 2023 was a down year in terms of inventory, in terms of sales, in terms of a lot of real estate overall. So you can see in 2023, we saw it kind of go up and down, and that's things were selling pretty consistently if they were priced properly. But now we're seeing this year it went up, had a good amount of inventory at the beginning, then it started tapering off. We're getting a little bit more now. What are we? We're getting up to the 600-700 range in terms of weekly listings. And then we're in the same trajectory as 21, 22, 23. 23 much lower though, but similar trajectories as the last couple of years. And then we're going to go into the sales. So in terms of properties sold, we're seeing much more get sold, but also relative to the amount of inventory we're getting, right? So last year, 2023 was probably the worst year we've seen overall in the last 5 years, even lower than 2019. We're actually on par for 2019 right now. We're in a similar kind of trajectory there. Are we going to get to 2022 numbers, 2021 numbers? Probably not. I don't see this sticking around too long, but we'll see what happens. Hard to say. I know a lot of people are still wondering what's going to happen with the interest rates and all that stuff. So we'll get into that a little bit later, but I'm going to go through a few other things here. So we got the average price points in terms of residential homes only. We actually hit our peak right now. We're at 725 roughly, just below some of the 2020 new numbers. But if we go into residential and condo, so if this is a market overall, we're in the 680-ish range in average price point. But do I see that happening for the rest of the year? Probably not. But this directly correlates to what's happening on the market, right? Like we're seeing a lot of properties sell a lot faster now. It is spring. The spring market does what the spring market does, and it gets buyers out there, a lot of motivation, a lot of people looking to move and get into homes before the summer hits. So we're seeing that happen right now. A lot of the inventory that has been selling is that it's fresh inventory, right? So the difference between fresh and recycled is pretty simple, right? We're actually seeing a lot of the homes that got listed, in this time frame from November and December when the market was at its lowest. Like if we look at the sales were at their lowest point last year in the last 3-4 months of the year. But we were still seeing a bunch of inventory come up, right? So a lot of the stuff that didn't sell here is also coming up here, which is contributing to the new listings. Are they new? Yes, they're new to the market, but are they new to the area? No, they're definitely not. Because they've been on the market for the last couple of months and they got canceled and people waited for the Christmas holidays to go through, right? So what we're seeing is things sell that were on the market or that are fresh on the market. The stuff that was on the market is selling a little bit lower. The stuff that's new to the market and is priced appropriately is selling quite quickly. But one thing I'm going to share is actually, we're going to go into this guy right here. So this is the average prices for the homes sold. So taking out 2022, which was the peak year, and taking out 2020, which was COVID, 2 weird years, right? So if we look at just 2021, 2023, and 2024, look where we're at. We're on that same exact trajectory where we're going to see things peak between March, April, May. Then it's going to level out, and then it's going to drop down in the summer, and then we're going to see a little bit of a spike in September, October, November, and then we're going to drop off for December, right? So this is kind of where we're trending this year, and if you bought in 2021 of January or 2023, we're actually still above that price point, right? And we're going up a little bit higher. Do I think we're going to surpass these numbers? I'm not sure. It's hard to say because there is still a lot of buyer hesitancy out there, but it's not the same as what it was last year. And even last year we saw a bit of a spike. So just going to that, those are two big things to look at. Now I'm going to go into this area here. So if we just look at, where are we at here? So days on market. So this is one big thing to watch, right? So if we look at all price ranges, all properties, and if we look at an average days on market, so in January of 2021, average days on market was 23 days to sell a house. Then, it gets down as the year goes on. And then January 22, 19 days on market. And then we hit a crazy low in March of 22 of 10 days on market. These went up all the way, obviously. And then what are we at here? So January of 2023, we saw 43 days on market, which was, back to, those 2017, 2018, 2019 years. This is more of what you were seeing. And then again, that year in 2023, in May, we saw 22 days on market. So cut in half from January pretty much, right? Then this year, so 43 days on market for December, 50 days on market for January, and now we had a steep decline of 38, right? So we're heading towards that direction of the 20-ish day mark, and I think we're going to hit that in March. We're probably to see I want to say low 30s or mid 20s for days on market. Month supply. This is another big one. So what really constitutes as a buyer or seller's market? Typically the month supply. Right now we went from October 3.2 months of supply, November 2.9. Obviously these two things factor in because the inventory goes lower. We're getting more months of supply right now because the inventory naturally comes up. But yeah, like this is like 2 months of supply is not much, right? And then cumulative days on market, I want to go through that as well. So this is consistent. Like when a property is listed for, as a new listing, or if it comes back as the same listing, these are the things to look at. So we were at January, 58 days of 2023. This January at 62 days, and we dropped down to 27. So this is factoring in those stale listings that were sticking around from these points from September, October, November, December. We got up to that's median. Let's go to average actually. So 71 days on average, cumulative days. And then we dropped down to 57. So that's a pretty steep drop. And then obviously we're going to go to percentage of list price. So how many homes are hitting their percentage of list price? So January 22, these are obviously, that's the peak year. So 112% of asking. So let's go to December, 97%, January 23, 97.4, 98, 98, 90, 98, 99. So last year in May, we hit 99% of asking price. So pretty much everything was selling at asking or a little bit over, but not much under. Then this year we dropped down to 97.5% of asking. Now we're back up to 98.4. And it looks like we're climbing, right? So looking back to those. And then one last thing I wanted to look at was, so obviously the market watch. So the market watch, so what are we looking at here? So here we're going to look at the Canada 5-year bonds. So let's take a look at the last 3 months. So this is for the fixed rates. I've talked to people about this before. So big thing on fixed rates is, where are they going? What's happening? In February, they actually went up a little bit higher. This is pretty much the time where we saw the report for the inflation. So things went up a little bit here, but now we're kind of trending downwards, a little bit up today. But I think we're going to be trending downwards towards that 3% mark for Canadian bonds, which typically would lead, 1.5% to 2% on an insured mortgage, which would give you a rate of somewhere between, let's say 4.3 to 4.9 roughly. So they're kind of, that's where you're targeting in that range for the fixed rates. Variable rates, obviously a big thing there is that it hasn't moved. That doesn't really help with fixed rates. It affects a little bit. But the fixed rates is really lines of credit, variable mortgages, and revolving debt, because that's where they're counting the variable mortgages there. So if variable mortgages go down, who does it really affect? It only really affects the people that own homes on variable mortgages. Does it affect new buyers? Not really, because most likely a new buyer in today's market is not going to be going with a variable rate. They're probably going to be going with a fixed, either a 3-year or a 5-year, and most likely the 5-year to get that best payment that's possible, right? Because like right now, any mortgage is going to seem like a lot, but we're at higher rates and the highest price points that we've seen since March of 2022. So a lot of things to discuss there, a lot of things to digest, but overall, if you own a home, it looks like prices are coming up. Are they going to taper off a little bit towards the end of the year? Most likely, but at the end of the day, things still remain is that we still have low inventory. That's not going to change. You can't just build 1,000 homes and put them on the market today. It's going to take time, and that's just the overall market, right? If we had 1,000 new homes adding towards the market every week, then yeah, we'd be in great position and people would be able to afford and stuff like that. But obviously, the best way to deal with the market is to get in and see see what you can get for your price point and hold on to it until you're up at that point too. So again, a lot of things to look at here, but hope you guys like the update. I'm going to do these a little bit more often now and go through them a little bit diligently so we can all get a good aspect of what's going on. And if you have any questions, feel free to call me, text me 613-863-0873, or send me an email, dean@feelyrealestate.com. Thank you. Have a great day, guys. Bye.